Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite US Market Update. Pretty interesting week in the markets, but pretty much in line with what we talked about last week, at least in the US markets, obviously I'm talking about, where we had the Wave 3 continuation, and you can see that on Thursday and Friday we pulled back just a little bit, but we are also heading into a holiday weekend here in the US with the markets being closed on Monday for the Labor Day holiday. I had mentioned that with the lower volume, if we were able to meaningfully break this previous Wave 5 high, that we should get some volume to kick in. You can see that we actually gapped above that level and moved higher at the beginning of the week, Monday, Tuesday, and Wednesday, with a little bit of a pullback heading into Thursday and Friday. So let's switch over to the SPY and see if volume did indeed kick in on that move. And you can see not really, not even on the gap up day, which occurred on Monday the 27th, still didn't make average volume. So there's still a lot of non-believers in this move, even though it's in the Wave 3. And remember what we had talked about as far as the charts, the fact that we had not only this huge ascending triangle with those previous Wave 5 highs back from January, but we had the pennant pattern as well. So just to refresh your memory, we had this big huge ascending triangle here, and then within that we had a pennant pattern, and then we got the breakout on Monday. So we had a gap up on Monday's trade, and then we barely finished higher on Tuesday. Not really the kind of follow-through confirmation day that you know by now if you've been listening to these recordings that we need, but we did get a pretty good follow-through day there on Wednesday. So Tuesday still finished to the upside, so it kind of counts, but it wasn't. It certainly wasn't a convincing one, but Wednesday was pretty good. Now, there's a lot of people that are saying that you kind of got to take the end of the week with a grain of salt. We had the big gap up. We may even come back down and fill that gap. I hate seeing gaps in the charts, especially in the large market, the S&P 500, because when we have to come back down and fill that before we can continue to move higher. Same with any sort of equity issue, but specifically with the market. So we could keep going from here and finish off that Wave 3, or we could come back and still not violate this breakout. We could come back down, test the breakout, and move higher. The only thing left from keeping this to being a convincing upside breakout is that lack of volume. And I've mentioned this before, Elliott Wave is the greatest single indicator. You can have your other confirming indicators, but you always have to look at price to volume action. That always needs to play into whatever trading system you're using, and we need to have a sign of a little bit more volume kick in for this to be a convincing enough move to go higher. But we could simply do that, or we could just skip the test, filling the gap at this point, fill the gap later, and continue higher. But I don't think we're too far away from volume coming in if indeed this is going to be a continuation of the Wave 3 upside breakout. Again, remember that the Wave 4 is not signaling that the Wave 4 has begun. It's only telling you that if the Wave 4 has begun, here's the likely pullback. So we'll see what the beginning of the trading week looks like, especially coming out of that holiday on Monday. It should be a decent volume day on Tuesday. Looking at the VIX is still holding that level of 12. It doesn't want to give that up this time, which is again great for us as option traders. The more volatility, the better. So we've come down, we hovered around 12, we bounced up, came back down a little bit as things got quiet on Friday afternoon, and again that plays more into the fact that we had a 3-day weekend here in the U.S. more than it does the lack of volatility in the market. People on holiday weekends tend to, or traders at least, tend to not come back from lunch. So they come in the morning, they do what they need to do, and then when they go for lunch, they're gone for the holiday weekend. They head up to the Hamptons in New York or whatever they do. But it tends to be quiet on the second half of a Friday into a 3-day weekend. I also wanted to bring up the Bulls versus Bears. I mentioned it again last week. It bears, sorry, it warrants a better word looking at because you can get the Freudian slip. It's up to nearly 60 now at 59.6. So 55 is when you start to get elevated on the Bulls. 59.6, we're really getting near that 60 level. We're starting to get pretty extreme. Remember, it hit 65 before the market correction in January. Now, the difference is the bearish level is still at 18.3, and it had gotten down to below 14 in January. So not only did we have the extreme level of bullishness, but we had an extremely low level of bearishness. The bears are a little higher right now, so that could still keep enough ammunition or momentum to move the market higher. But when you start to see the bulls hitting the 60 level, it has to be in the back of your mind, which just means regardless of what you're doing, be cautious, protect yourself. Doesn't mean you can't play upside trades, but it is a warning sign, and we want to keep a clear eye on that. I did want to touch on the dollar again real quick, the U.S. dollar, as it continued its move down. A little bit of bounce on Friday, but again, that could be squaring up positions going into a holiday weekend. But we're back down here testing that 3 level, and then with interest rates, now the charts are starting to line up a little bit more. Remember, we were talking about how they didn't make sense because they weren't jiving or in sync, but they are now. And so when we take a look at this, we're set for if the dollar gets stronger, then interest rates may bounce and go back up. If the dollar is going to weaken, as it has, then you can see where interest rates can come back down. So the two charts are back in line. There are some that used to trade that kind of divergence, but it's just not as popular of a trade as it once was. Getting to our case studies, I wanted to show you CLR that continued its upside breakout that we talked about last week, going all the way back to this doji day, and then we had the upside breakout, so we moved up. We didn't get the confirmation day, and then we moved up on the 24th, and then we followed that up with a move higher on the 25th. So it took a while, but we did get a confirmation on this upside breakout. But again, here's those darn gaps again. Do we come back and fill those gaps and test the breakout before we continue to the upside, or do we just take off from here? I like to take a look at both volume and the DMI in this kind of a scenario, and this is not comforting for a continued upside breakout. Look, there's no volume behind this move, none whatsoever, and volume has fallen off a cliff while the stock has moved higher. So that bears keeping an eye on. And then when we look at the DMI, and we notice that the ADX is not showing any strength of this move either. So when you look at those two things, it makes you think that we may come back and fill both those gaps and test this breakout and see if it does indeed hold, rather than powering higher from here. It just doesn't seem to have the volume or the strength in this move for it to be a continued upside. But we'll watch that and see. There could be a point if we do start to see a reversal, and note that we do have a doji on the chart there that occurred on Friday, opening at 66.04, closing at 65.95. Maybe that's going to tell us whether or not we bring some strength and volume into this upside breakout, or that's the end of the road and we come back down and test this and see what happens from there. But it's going to be quite interesting. We do have a tiny profit in this strangle with the upside breakout, and if we do get a look like we're going down, we could then close the calls. But as you know, you don't jump the gun on taking one side off, and that's either direction. Let the trade play out. We have plenty of time, and all we need is a directional move one way or the other. Well, this one certainly is interesting. ULTA, look at that move on Friday following earnings, just when we thought, as I'd mentioned, that this could be out of the months that we have been doing this and showing you case studies ahead of time. Again, not back-tested case studies, but you know, if you've been watching these videos, we've been doing them ahead of time, that we could potentially have our first losing trade. Nope. It blew to the upside and went right to our strangle, our butterfly, which is where we had it set up back before we kind of ran out of time on the move. So we had set our butterfly up here in the 270 area, And look what happened on Friday with the earnings report. Boom, right there. High hitting on the very top of it, 268.88, right in the butterfly. So now what looked like it could be a losing position has actually turned into an extremely profitable butterfly due to the fact that time decay came out of it. So the time value came out. So we got the higher delta on the lower call, and that created an extremely profitable position. So here we thought we might be looking at our first loser, but nope, Elliott wave comes through again. Just didn't quite get there in the time frame initially forecast. But that's the beauty of using those out-of-the-money butterflies, is you don't have a lot of money at risk anyway. And so when you get something like this occurs, you take what looked like maybe going to be a small loss into a massive profit. And not to be outdone, Lulu did the same exact thing, powering higher in this wave 3 that we had talked about. Now look at this when we add in the Fibonacci levels. I showed you this the last week. Here was our breakout. So there's your fib retracement, a perfect 50% retracement. So then we look at the fib extensions, right? So we put the fib extension on. This is going to blow your mind when you see where this went. Look at that. Look where the high was. Right at the 161.8% fib extension level, and then it backed off. So we had this big, huge gap. What a home run of a trade this was, dealing with Lulu. Just amazing. So our streak is continuing of the profitable case studies that we've been looking at using. I use Integrated Investor. You can do the same exact thing within Profit Source, but if you're not learning the intricacies of Elliott Wave so that you can apply this regardless of what anyone else may tell you, you have seen the proof here week after week, you're really missing the boat. So with all those case studies being done and all profitable, wanted to add a new one for this week. MMS is the one I was looking at. There were 6 that showed up on my searches, and this is the one that I wanted to share with you. The problem with this one is the options are a little thin on volume, open interest, so you can't really do a butterfly here. So this is going to be a bit of a some sort of a straight call. Even a call spread would be difficult with this. So it's going to be either an at the money or one strike out of the money straight call, or something along those lines that you might consider if you wanted to follow along with this one. But it's in a wave 3. It's moving higher. If we look at the volume chart, you can see that volume is increasing with it, and money is coming into it from the money flow. And then we look at the DMI, and you can see that we have all of the rules, if you know what the rules are, if you've been following them, with the DMI indicator showing that this does indeed have some strength to it and is likely to continue. So we'll see how this one plays out in the coming weeks as well. Might look at maybe October months, something along those lines. Not here to give individual investment advice, just simply sharing with you things that you can look at and make your own decisions on what you want to do. But wow, pretty amazing stuff with both ULTA and Lulu turning in just an absolute home run of a week. We'll see how CLR plays out. So it's been a fantastic week here with the trading. I hope you've enjoyed a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.